All right, hope you're still awake. My name is Irit, I'm from the investment fund of Deutsche Telekom. And we have here a panel of great minds. So first of all, we have Boris Reznikov, right? Who is the director of partnership at Stellar. Stellar is a distributed ledger-based protocol for cross-border payments that allow financial institutions around the world to transact with one another much more efficiently than what they do today. And then we have Gal Aviv, from CEO and co-founder of Blender. Congrats, by the way, on the recent raise.
Thank you very much.
It's a peer-to-peer platform, cross-border. And then we have Sean, I believe? Simon, okay, sorry. From blockchain... from the Acon Collective, okay, which is a blockchain-focused investment fund, right?
It's a crowdfunding platform focused on developing countries for Fintech and other technologies.
A crowdfunding platform.
Yep. Got it. Okay. Here we go. It's a crowdfunding platform focused on developing nations and facilitating Fintech and other innovation.
I was just told that you're joining us. Thanks for being here. Maybe we start with you, Boris. Blockchain for financial institutions. How do you see today the adoption by the big, large financial institutions of any blockchain startups? Or maybe before that, you can give us a quick brief on what Stellar is. I don't know if everybody here is familiar with Stellar.
Yeah, sure. So Stellar is a internet-level protocol for payments, and specifically for cross-border payments. So the state of affairs of cross-border payments today is that there are these disparate payment schemes in different parts of the world. So in the US, we have ACH. In Europe, there's SEPA. There's probably a separate one here as well, and they don't all interoperate together. So Stellar is a protocol that enables interoperability between these disparate payment schemes. So essentially, it's a way for financial institutions around the world to all speak the same language and transact with one another much more efficiently. So what I'm seeing today is there is increasingly a mandate coming from the top of large enterprise institutions saying, do something with blockchain. Just do it. And their large companies are starting these innovation teams and trying to figure out, what is the best way forward. And I think that's a positive step, but often what happens with large enterprises, things get stuck in a sandbox environment, and projects never really leave the POC stage. So from our perspective at Stellar, we're a small team, so we have to prioritize the way we spend our time. And for us, we'd rather work with a company, even if it's smaller and less exciting, that's really going to do something, rather than a huge company where the project may never leave the proof of concept stage.
Okay, talking about before Uber and Airbnb, who is more disruptive, the banks or the Uber guys. What kind of major obstacles? And that's maybe a question to all of you. Do you guys see that enterprises need to overcome in order to become even more disruptive today?
So, hi everybody. My name is Gal Aviv. I'm the CEO of Blender. If we look 10 years ago, people or banks always said, we are going to become digital. Today, digital is a must. Today, if someone is not very strongly in the digital world, does not exist. Mm-hmm. And what we actually see is that there is a huge differentiation between different financial institutions, between the world in Israel. The world is more innovative place than Israel in the point of view of the banks and the financial institutions, where in Israel here things are quite laid in the back. But if we even look globally, there is a huge differentiator between the different financial institutions. And one of the trends we see today that is going very strongly is that banks are building innovation labs. Mm-hmm. And mostly these banks who build these innovation labs don't do any innovation. Actually, the most innovative bank today is Goldman, which never opened an innovation lab. And that's, I think, one of the trends that we see is that innovation needs to come from within, from within the bank, within the financial institution, by understanding that innovation can be brought from outside or can be brought from within. But it's very important to be brought, and without it, you will just be run over.
Just to add to that, I've been through an innovation with a big bank, been through that innovation program, and I think the key thing is for the technology, everyone talks about the technology, really it's the business case that's the most important thing, and revenue streams that are going to derive from that. So identifying the key stakeholders in an organization, if you're going to go through that process, is kind of key. I think a lot of the labs are getting better at doing that now. They're starting to reach internally and figure out who would be best, there's technology is an enabler, but not across the company in certain areas, and they're doing better at looking at that. But I think there's still a lot of confusion. Blockchain it's a great technology, but it's not going to solve a lot of different problems. So existing technologies can do that already. So it's there's a conflation between different blockchain and crypto, and a lot of conversations I have. And the two could definitely be, I think over time we'll see that to separate and bifurcate into different conversations. So I think that right now it's still early days. Everyone's starting to work it out, how to work with smaller companies, how to work with innovators. But everyone's got a long way to go. And as an entrepreneurs ourselves, we have to understand how we work with big organizations too.
Maybe a question to you, Simon. From the investment perspective into blockchain, where are we today? And are we speaking more kind of still use cases at the infrastructure level, application level? And what do you think, in which stage we are, and where will we be in 2 years from now in terms of blockchain?
It's interesting. I was 2 weeks ago in Stanford in the US, and there's a lot of technology companies that are growing from the blockchain. But still lots of conversations I see lots of companies in crypto have a business model that's facilitated by crypto, but they're not blockchain-based companies, but then everyone assumes that they are blockchain. And I think there's a confusion in the market. VCs, the investors, are also starting to get into this world. They see it as a more liquid way to move funds in and out of the market, make a quicker return, but they then have to have conversations with the LPs. So I think what's going to happen is that there's going to be more crypto-specific funds coming on the market, VCs getting into the market over the next few years, and it will become more of the business model will be the one that's the focus rather than the technology, which is probably where it has to go. I think it'd just be a more rational decision.
Right. And last question about blockchain, Boris, maybe to you, ICOs. How do you think that they changed the funding landscape?
Yeah, well, so in the beginning, they were a means by which you could democratize access to investment. That was very interesting, but I think that's increasingly less the case because what we're seeing is projects are moving away from this concept of a crowd sale, of a public sale, and more towards an institutional pre-sale for several reasons. One is it's frankly easier to secure a few large investments, but most importantly, it's because of regulation. But I think you made the right point, which is that for VCs, for traditional investors, the ICO is a pretty attractive way to deploy capital. Especially because the liquidity is much higher, even if there is a year lockup period, which is increasingly the case. It's an interesting paradigm shift for VCs as well as the public.
Yeah. It's going to be interesting to see whether we will be relevant within the next 10 years. You wanted to mention something, Gal?
Yes. Regarding innovation and financial institutions, we see it quite a lot now because Blender is not only an online lending platform that works in underserved markets. We have offices in Israel, in Italy, in Central Europe as well, but we also sell technology to financial institutions. And we see that there is a great change in the last few years in that direction, that really financial institutions in general, banks and insurance companies, understood that innovation can come from without, from external suppliers and vendors, and they're willing to do a real business partnerships, because in the past you would buy technology, you can say by the hour. But this is not a true and genuine and strong and cutting-edge technology. This is just a programming time. And if you want a cutting-edge technology, you need to do some kind of partnerships. And we see that there is a strong willingness of financial institutions today to go for these type of partnerships and this. And this is something that is a true change that happened in the last few years. That is.
And this leads me to another question. We talked about M&A before. Do you consider or do you think financial institutions will be more in the game for partnerships, or will they also be potential buyers in your view?
So we see that there are some financial institutions who do buy, but as we see the system and as we see the internal politics of financial institutions, most of them are not there yet. They are there for using the technologies, they are there for making partnerships with third parties. Then most of them are not there to buy these third parties. But I'm not afraid of that. I don't think that, in any case, I don't think that this is the exit route for any fintech company, because the end game won't be there. And I think that there was yesterday a big announcement by Amazon that it started banking services in the US. We saw actually PayPal already 2 years ago starting lending services. We know that Alipay is already there, and Facebook is already there. So in my belief, the world of finance is going, retail finance especially, is going to have is going to be very interesting in the next decade, because all these very heavy financial institutions that we see today, and they are certain that they are so big to fail, for the retail industries, they won't be there. And the companies that will exchange them are the technology companies who already got the clients. They just need to supply them the product. Facebook already got all the retail banking clients in the world. Just they need to supply them now these services. Same as Amazon, same as PayPal. So all the banks that sit on the side and say, okay, we don't really need the technology because we got the clients, they're with us, we got the engagement, we got the relationship. Guys, the X generation don't want, the millennials, the X generation, don't want to get into a branch even once in their lifetime. Which relationship are you talking about?
Yeah, just to add to that, data is becoming more open, so all companies now having to they're having to open their data through APIs to other companies, third parties, so particularly financial institutions this year in the UK and across Europe, they're going to be forced to open up. So there's a huge amount of competition coming, also from the big technology players. So I think there will be a spate of, there's going to be innovation, but there's also going to be those big companies who need to control, they need to stay ahead. So there's going to be a big, I would say in the next 2 years, there'll be a huge M&A activity in fintech and across other sectors that are related to data and data exchange.
Yeah, I fully agree.
Yeah, I'd just add that, we're seeing a lot of non-bank financial institutions starting to increasingly compete with the banks all around the world. And from our perspective, we want to connect each of these companies, whether they're banks, traditional banks or not, so that they can transact with each other more efficiently. And ultimately what will happen is that, it'll be a competition for the best user experience, for the best services that they provide. And the traditional role that a bank plays will be commoditized.
I want to shift a little bit into your space, Gal, the peer-to-peer lending. I've met you a couple of years ago. I'm curious to hear from you how you think the market or the space shifted over the years, and how would you describe the space in today's environment? Okay,
so that's a great question, because we have a point of view of different countries and different regions and different cultures. When you speak, we are an online lending company, we're not just a peer-to-peer, and we'll get to that because it's very important to understand, because this is the involvement of the field. And when you look at the value chain, what are people looking for? So you have two types of clients. You have the clients, one client type is the savers, and the other client type is the borrowers. And both of them want the best product possible. So the savers want a safe, high-yield saving product. The borrowers want a very good user interference, which is very quick, very frictionless, and that supplies them exactly the products that they want very accurately. So in the borrowing side, and with the borrower side, I think that the best experiences, the best rating systems, the anti-fraud tools that you got, and that you can really decide who to give money to. It doesn't matter if you're a bank, insurance company, online lender, or a peer-to-peer. It doesn't matter for the borrower so much. It's more in the PR level. The other side is the lenders or the savers. And you mentioned the big fundraising, the fundraise that we just had at Blender. This is an institutional body that came to us and told us, guys, you're doing a great job. This is exactly market that we want to be at. Please take the money and lend it off. And actually be our channel to get a better return for our savers. Well, that's true for Europe. But if you get to Israel, here the situation is exactly the opposite. Because in Israel, we live in a society that is very innovative, you know, by the small companies, startup nation, and everything that you heard all these days. But the big institutions are not there. Like, they're not innovative so much. The regulation is not there. And what's that effectively happen is that everyone thinks that they can invent by themselves, and the banks think that they can invent the technology by themselves. And we saw what happened to Leumi that already spent over $100 million and where it's brought in with Pepper. And we saw that the insurance companies are not in the consumer lending space so much in Israel, where it's a great market with one of the best returns we see globally. So very low defaults and very high yields. And this is a big differentiator that we see between here is that we are working directly with thousands of borrowers and lenders, which is a completely genuine, true, native peer-to-peer lending market that was invented back in 2007. And while in Europe, there was a complete change into more balance sheet lending activity, big institutional bodies who come and put the money in, and you leverage this capital and you lend it off. Mm-hmm. So it's like banking. And here it's like this beautiful idea of peer-to-peer.
Thank you. Maybe many of you guys will be interested to hear from these three executives. What are the kind of key trends that you're looking out for? If it's blockchain or if it's your space, Gal, what would you describe or how would you summarize the key fintech trends in your view for the next years to come?
I'll start. For me, it's definitely the open data. Data is becoming the currency, and now everyone's forced to open their, their legacy data stores to open up to third parties. That's going to change the game. The access to data for third parties has always been critical, and now it's going to be open. So they're going to drive a lot of innovation in the space. So I think it will change hugely over the next 2 years.
From a blockchain perspective, I think we've come a really, really far way so far. The acceptance from both, enterprise companies and, medium-sized companies is quite large. But I think what's really exciting and the trend that I'm most excited for personally is central banks getting into the game. If you rewind back to, 5, 6, 7, 8 years ago, the concept of blockchain was frowned upon by not only banks, but especially governments and central banks. And now you see a situation where they're increasingly looking at it with great interest and possibly issuing a central bank currency on a distributed ledger. My personal opinion is that is not a too far-fetched of a scenario that we could see, come to bear in the next handful of years, which would be, amazing.
So my point of view is more client-based. If we look at the history of banks started as a one-stop shop. So from the bank, as a bank, we get services as our saving accounts, our deposits, our cash account, our mortgages, our lending, our trading. It's like this all in one, but nothing is really good. And if we look at our mobile phones, we have one app to take pictures. We have one app to look at these pictures. We have one app to chat with our friends. We have one app to look at our emails. We have a specific app that is really good for each one of the activities that we are involved and engaged with. And every time that someone's tried to do a all-in-one type of app, it goes nowhere. Nobody uses it. And I think this is what's going to happen also in the world of banking and the world of finance, because we already see it with different fields, which it started, but I think it's going to be really specialized. You will have one company that do that very good, that do saving really good. You have one company that do trading really good. You have one company who do lending really good. And we'll get the service from that and that and that, and that's really speaks together with PSD2, that now, if I would ask from someone from the banking industry in Europe, so what is the most important for you now? This is the data of my clients. Well, now Blender, with 2 ticks, gets all this data of his clients to the system, or big data analytics engines go over this data. It's the client's data. It's not the bank data anymore. And so wait, so what I left with as a bank? So I don't have the data anymore. It's not mine. Someone else is utilizing this data much better than me. I became like some warehouse that holds something. And I think that this is the big change that we will see in the next few years, that people will consume services from specialized vendors that will do it really, really good, really cheap, and really fast.
Yeah, I agree with all of the observations, and data is getting super important. I'd love to ask this question. What keeps you awake at night in terms of director of partnerships, CEO of a great company, and an investor in blockchain? What is it that kind of keeps you awake? What are the threats on a macro level that you see? Or nothing and you sleep well?
No, I mean, I work in a very volatile space with lots of action happening one way and the other way. But that's the reality, and that doesn't keep us up at night. But even if there is, some regulation has a big impact on this space. I think most people will agree that the more well thought out regulation, the better, because regulatory certainty helps everybody. But at the end of the day, even if there's a big downturn in the space, we just want to be, at a point where we are already serving clients, and we are. We're actually one of the few companies in the blockchain space that's currently processing live customer transactions, which is what I was mentioning a little earlier, that we really like to focus on the immediate volume. So, we want to be at a point where even if there is a big downturn in the space, we're already serving customers, and that's something that we can survive.
Yeah, I'd just say that's probably going to be a correction in the space. There's, lots of people talking about this being a bubble, particularly in blockchain. There's probably going to be some correction, but then that's going to validate the right kind of technology, the right kind of business model. So I see that as probably a good thing. The one thing, I have a 15 years in cybersecurity background. Privacy and security is going to be absolute key to get right. And it's interesting, your point about banks just being the custodians of data but not actually owning it anymore, but they're still regulated on the fact that they actually have that data and store that data. So they have massive overheads, which fintech companies haven't had in the past, but I think fintech companies will probably have to take on more compliance and regulation than they're used to, and that's going to drive, that's going to be painful for some companies, but it's going to drive further innovation. So I work with a number of security companies that are trying to innovate in this space to accelerate innovation, but do that securely. So I think privacy and security will be kind of a fundamental concern over the next few years.
So personally, who that knows me understands that I'm not sleeping much at night, and know why. But regarding your question, I come from the Air Force, and we always say that danger comes from the six, and that's I think what's happening now, because we all see the danger as what's happening now, but we're living at times of a tectonic change where the world of banking is going to completely alter. And if we look at observations that in maybe observations of top economies that speaks about that from the S&P 500 companies that we see today, maybe 15 will last the next, I don't know, 20, 30 years. So, and this is also true for banking. It's also true for all the world that we work at. And I think that all the ecosystem is in a massive times of change. And we see it adiabatically. When we sit here, we see also all the time the small change. But we need to look at the picture from 10,000 feet above, and then we see that actually when there is these turbulences that going below, you just need to excel in what you're doing. You need to be really connected to your customers and to be connected to your customer base. And that's it, because and to plan ahead, but really to plan ahead, where is the true values that you bring and how to bring higher value, because I don't know, today is that and tomorrow is that. We need to excel in what we are doing.
Yeah, I think that's very, very true. I want to thank you personally for your time here. I know that you're very, very busy, and really appreciate that you came here. So thank you a lot from my side.
Thank you.